Brian Sharples is the company's CEO, and he joins us now from New York. So, Brian, you made it through the first month or so, market meltdown in between. How's life as a public company been?
Well, so far so good. It's my second time doing this, and it's not as bad as I remember it, to be honest.
But in all seriousness, this is a company you started, about 6 years ago, and
Yes.
is now worth $3 billion. And we were just talking about Groupon, a company that saw its valuation skyrocket. Do you get a little jittery about that?
No, you really can't. I mean, all you can do in this situation is operate the business. Obviously, other people set the market prices. I think we're super confident about our business. One of the things that I think is pretty unique about HomeAway is that HomeAway is a business that performed really well during the last downturn. We earn our revenue from people who list homes on our sites, and we earn lots of money for those people. And in down times, they need us, frankly, more than in good times. And so as we look at all the things that are happening right now in the world, we don't think it's going to have a big effect on the business. And I think we've made that case to shareholders and feel pretty confident that they understand it.
That is an interesting point. So basically what you're saying is if the housing downturn continues, your argument is it helps your business.
It seems to. It doesn't hurt it. I mean, in good times when people are buying vacation homes, a percentage of those people are going to go rent them. But what we found during the downturn, when the vacation home new buying market slowed down, just higher percentages of people who own came in the rental market. There's 20 million people who own vacation homes just in the U.S. and Europe. And, of course, we're going to move the business into Asia and South America as well. We're the market leader with 625,000 listings, but that's still a small percentage of the total that's available to us as a company.
Right, and you guys largely make money through those listing fees.
Yeah.
You're a guy who's a brand builder. I mean, before you were doing this, you were helping companies like IBM and Apple with their own brands, and you said you're building the business. Yeah. So how do you get this brand known in other new markets?
You know, that's a great question. It's the primary reason for us going public. I mean, as a company, we've had a great run over the last 5 to 6 years, but per our own awareness tracking, when we look at our target market of both owners and travelers, our company still has less than 10% unaided brand awareness. So going public is a big part of that. We obviously get a lot of PR from being a public company, and that is, to be honest, the prime motivator for us to go out. We didn't really need the cash. We're cash flow positive. And the other side of it is that, yes, we are going to invest to build the brand. We've done a couple Super Bowl ads already. We're not going to do it this year, but we are going to continue to do brand advertising for the business. But more or less, most of the marketing is really still about just developing a great product, creating buzz around the product. Almost all of our business still comes through word of mouth and referral. And so that's where we're concentrating the majority of our energy.
But those marketing costs are going to continue to climb, correct?
As a percentage of sales, probably not. I mean, at the current state we're in, we have a very strong position in this market. It's not like there's a big competitor nipping at our heels that's causing us to take all of our profits and throw it into marketing, as so many internet companies have. We could certainly grow this business faster if we took a lot of our free cash flow and spent it on marketing. But we're trying to be a different kind of internet company. We're trying to be a company that has very steady, above average growth, but also very high levels of profitability. Last year in 2010, our free cash flow was 30% of our revenue, and we're trying to grow those margins, not contract them. So we're being pretty disciplined about what we spend, and as we get bigger, we'll be able to spend more. And in the coming years, that marketing budget will be big enough to make us more of a national player in marketing. And until then, we're just going to be patient because the business is performing very well.
Right. I'm glad you mentioned the competition, because a lot of people have started to compare another company, Airbnb, which is still private, to your company. So you don't really see them as a competitor? Is that what you're saying?
We know them very well, and they have a lot of competitors. It's a pretty different space for a number of reasons. That's a business that's really focused on helping people rent primary homes, mainly in metropolitan markets, whereas HomeAway is really all about people who rent second homes in vacation markets. And so the overlap in traffic, the overlap in customers is very different between those businesses today. I like the Airbnb business. I think they've got a great opportunity with that company, and we certainly wish them well, but it's a bit of a different path than we're on with HomeAway.
All right, Brian, thanks for sharing your perspectives with us. HomeAway's Brian Sharples.